Good to see you, JJ the CPA here. So what am I doing? Well, I put in, 16 hours today. Wrapping up, wanted to shoot a couple of videos. It's actually my third one that we're gonna post we'll post them tomorrow. But what are the three things that my clients are concerned about? What are the three things that I'm talking to my clients about outside of July 15th and what is due, what has to get paid in, quarterly estimated tax payments? What are the three things that I'm talking to my clients about? So I'll just tell them to you. One is preserving cash. The second is cash flow. And the third is cash in 2021. Catch the theme? Cash. Cash is king. Okay? So preserving cash, okay? We're not in normal times. This is what I'm talking to clients about. We're not in normal times. So what's normal times? Well, I got extra money, I want to pay down debt. Yeah. I mean, if you got 29% credit card, that's not okay, maybe you pay it down. But when I say preserving cash, what is it that you have to pay for, and pay for that? Maybe you don't need to pay for everything. You can interpret that however you need to. Okay, maybe you need to talk to vendors. Now, we saw, all of us, and with my clients, a pure shutdown all the way down. Okay, numbers are going up with cases and we're not shutting down. Okay, we didn't even know about how many cases there were and we shut down and all the relief came and world stopped, right? Well, it's not stopping now. So project ahead 5-6 weeks. I've got some other videos on that. Go to my website, jjthecpahelp.com. I got a survival page that talks about predicting your cash flow in 3 to 5 weeks. So I won't repeat any of that. But preserving cash is just getting smart about your cash. Okay? You want to hold on to it. So normal times, hey, I'm going to pay down the line of credit. Why wouldn't you do that now? Well, is it going to be available to you? That's what I talk to my clients about. And of course, I hear from my clients, well, I'll always have it. I know the banker. We play golf together. I've been with that bank forever. And okay, well, we're not in normal times. So maybe it's okay for a line of credit that it's 5% interest to let that sit and hold on to your cash. So then when we talk about cash flow is what else is coming in and what's going out. Real theme there, leading back to the first thing we're talking about, which is preserving that cash, preserving the inflow that's gonna make that cash position increase, and then kind of preserving cash by paying attention to what's going out the door. So cash flow, what's coming in, what's going out. Now, you may have a pile of bills. Prioritize them, even in my own office, right? The most recent bill is on top and the oldest bill's on bottom. Let's get old school a little bit, would you? Okay, now maybe you're in your phone, maybe you got an app, maybe you got some sophisticated ways to do that. Well, then get after it, okay? If you have some hot items, you got some past due items, well, put that in a second column or put that in a second pile. Because guess what? Get on the phone with those vendors, talk it through, figure out what needs to get done. Okay? Cash flow coming in. Okay? You got clients that owe you money, they need to pay you. Yeah, I get that we're in hard times. So get with them. Hey, what's going on? Just want to check in. Well, gee golly, I got this going on and this going on. Gosh, me too. Share with your customers that you're having the same issues that they are. And they'll now feel easier or better about paying you. You don't have to get mad at them and, send Bruno, so to speak. And maybe you can say, well, listen, can I get half now and how about half in 3 weeks? Get money in the door. Don't sit around and let your accounts receivable go up. What's other ways to get money in the door? Get a hold of your customers, stay in front of them, do whatever you can. Now, I understand there's some businesses, they can't do it, or they can't do something. Okay, well, if there's literally no way to do that, then as an entrepreneur, what else should you be looking at? Okay, because that leads into the third thing, right? 2021, where are you going to be? If your business is going to close permanently, well, you aren't as an entrepreneur. Do you need to put things on hold to preserve cash? Do you need to put things on hold because there's no money coming in? Do you need to put things on hold so there's less going out? You have a lot of decisions to make, but the thing to remember is that, and it's like I tell my clients, you're in control of all of those decisions. It's your business, it's your money. Yeah, maybe you're gonna have a vendor that gets upset with you because you can't pay them. Get on the horn and tell them what's going on with you, because it's probably the same thing that's going on with them. You know, they wanna get paid too. Don't put your head in the sand, get ahead of it. The theme on the three things is cash. Cash is king. Preserving the cash, preserving your cash inflow, reducing down the outflow, all leads to the first thing, preserving cash. And then looking at the 2021 with real eyes. And real eyes aren't like doom and gloom. Real eyes aren't, oh, it'll all be back to normal. Real eyes is, okay, well, what did I do in 2019 revenue-wise? What did I do the last 6 months, the last 12 months in expenses? That helps you figure out what's going on in the next 6 months or in the next year. So one of the things that I do with my clients is, and this is done on QuickBooks, is I always run your traditional profit and loss statements and your traditional balance sheet and all that good stuff and do comparisons. But comparisons are crap when you're just going, well, what was January through June of this year versus January through June of last year? Reason I say they're crap is, well, I mean, for most small businesses, maybe in January of the last year, you collected on something you did in the prior year. And so last January looked huge. This January was normal, but you're beating yourself up because this January looks like it was down compared to the prior January. Follow? What I found is the most valuable P&L is the last 12 months P&L. So in what I just told you, if we're now in July and you're looking at financials January through June, okay, pull up a P&L that is July 1st, 2019 through June 30, 2020, last 12 months. And better yet, when I do that for my clients, I do a P&L, and you can select at the top of the report on QuickBooks that you want it to be by month. So with my clients, in that example, we're looking at July 2019, August 2019, roll it all the way forward. Why is that so important? Well, in July 2020, I'm looking at, in that one report with my client, what was last July, right? See what I'm saying? Like, I'm looking at the last 6 months of last year as well as the first 6 months of this year, because it's a great predictor of the next 6 months, at least for expenses, maybe for your revenue, maybe not. But at least you're able to get an idea of your expenses. So it's almost like in one P&L that's month by month, the last 12 months, it's, well, here's what I've done, and then a great predictor for the next 6 months. Why is that important in preserving cash, in cash flow, and looking at 2021? Well, because here's the last 12 months, right? So if you did some year-end planning, if there's a one big month that rolled into the next year, you're going to see that in the last 12 months. Now, one of the new things that I'm doing because of all this with clients is I'm doing an 18-month P&L, right? So month by month. So the ones I'm looking at with clients this month or after July 15th is going to be January 1, 2019 through June 30, 2020, month by month. Why? Well, in that one report, I can see, well, what happened last January of 19, what happened this January of 2020. Now, I just told you earlier, well, January of 19 might be skewed because something happened in December of 18. Follow? Okay, I get all that. But you're going to be able to see expenses, and if you're seeing things out of whack, then just go back and look at the end of 18. But see how numbers here are going to help you, the historical ones, predict your future numbers. Why? So that when you go into 2021, you have a better idea of your cash flow, your cash position. And when you're aware of that, when you're aware of these three items, okay, which, honestly, if you can print this report, you're seeing all of it 5 minutes. I mean, think about 5 minutes looking at anything. Okay, 5 minutes. You're going to be able to see trends. You're going to be able to see expenses. Now, if you're wanting to know, well, what makes up those numbers, then get into a general ledger. Okay, the general ledger shows you the details of what makes up these numbers. So that'd be really the next step that I'm doing with clients is I'm printing out the general ledger. What's the general ledger? So if in January, February, March, April, May, June this year, you're spending $50 a month on something, well, the general ledger is going to show you that $50 a month for 6 months to make up that then total amount that's on this P&L, right? Or you'll be able to see what it is. Why is that important? Well, when you're looking at cash position, preserving cash, and future cash flow, you want to know, well, where is this money coming in from and where's that money going out? And then you're just making some decisions. If you don't think that same amount of revenue is going to come in, then you got to start making some decisions on what's going out. And when you do that, then you're helping to get yourself to 2021 in a better cash position. So we're not in normal times. So what's interesting is, many are now they're actually like taking a look at their numbers. They're taking a look at their bank statement and their cash flow, partly maybe because they have a little more time. It's definitely more interesting now. It's definitely more crucial as we slow down and we don't have as many distractions. We've got a little time on our hands. We're looking at a bank balance. Well, where's it going? How's it coming in? So those are the three things outside of taxes that I'm talking to clients about. And from my perspective, if you have some advisors, excuse me, your investment advisor, bankers, right, are usually wonderful advisors. I think right now, I don't know. I don't know that that bankers are going to be able to continue to do things the way that they've done them, in the sense that businesses are failing, right? Real estate we're headed for a tumble. People don't need it as much, or you watch business after business close down in a shopping center. I mean, I was having breakfast this morning with my mentor, and we were just like holy mackerel, look what's going on here. It's a very popular breakfast place. He was there at 7:20 a.m. I got there about 7:30. He was there early, and we left about 8:50. No one else came in the whole time. Typically when we get together for breakfast there, most tables are full, which, I don't know, call it 35 tables. We were the only ones in there the entire time. Okay. But the business at the end of that, a hardware store, went out of business. There's 2 vacant spots. I don't know if people went out of business there or not. I don't know how long this restaurant's going to be able to hang in there. Okay, so now all of a sudden you have a shopping center that's running out of tenants. So what's going to happen to that shopping center? What's going to happen to the person that owns that, right? Well, they're probably making a payment to the bank. How are they going to make a payment if there's no rent coming in? All to say that when you're looking at your cash position, you're looking what else is going on in the world. What else is going to affect your cash flow? You know, if you have real estate, how is that affecting things? From my perspective in working with clients and talking about working with their advisors, so I kind of got off on a tangent just talking about bankers, just meaning I think they're going to be coming at it from a different angle than ever before, in the sense they're going to be busy trying to make sure that they're getting paid back. That's their whole job. If you don't mind, you probably know this if you've been watching me for a while, which I appreciate it. And if you haven't subscribed and made it to here, I'd love it if you'd be a subscriber. But anyways, I wrote this book. I didn't mean to plug this book, but it's on Amazon. JJ the CPA here. It's $12.33. I lowered it as low as I could. But in this book, I talk about what I'm getting ready to talk about here, which is the theme of this is not a do-it-yourself. And maybe this much of the book is on taxes, okay? The rest of the book is how to work with your advisors, okay? Your bankers, okay? Attorneys, investment advisors, and your insurance professionals. In fact, I spend the beginning talking about how to get with the right advisor. Be talking to your advisors. What's the biggest reason to talk to an advisor? In some ways, it's not really to go in like, gee golly, I don't know what I'm doing. Because if you own a business, you do. You're just hearing another perspective. It helps you talk about it, get it out in the open, makes it real. You're looking at whatever it is that advisor's helping you with. But even just to ask some advice about some of the business aspects that you're dealing with, because your attorneys and your investment advisors, your insurance professionals, you know, if you're going to talk with bankers, and I'm not coming down on bankers, I'm just saying, I don't know that they're really the ones you want to be visiting with right now, because they might just have a much different angle than really what you're wanting to talk about. And talk with your accountant, you know, wait till after July 15th. But start getting proactive if you're not. So, you know, when I'm not taking on new clients. And I haven't taken on a new client on purpose since probably November 2018. It's a great position to be in. Long story short, what I still hear when I have clients or prospects come to me, and what I hear when clients would come to me in the past as I was bringing on clients, is they would say, well, you know, my accountant doesn't call me, my CPA doesn't call me, I'd like some ideas. A lot of times people, when they switch, that's why they say that, or that's kind of their reasoning. Well, you know, my lawyer never calls me. You know, my banker never really reaches out. You know, the only time I hear from my banker is when it's time to renew. The only time I hear from my investment advisor is when it's time for them to make a commission. You know, whatever the case is. I only hear from my accountant because there's a deadline. Okay? Enough of that. Okay? Enough. Okay? It's your responsibility. It's you. Okay? It's you. Right? I mean, are you waiting for someone to tell you that it's time to eat? Right? Well, I didn't eat yesterday because, I mean, no one told me. So get in front of your advisors. And how? Your advisors are ready to talk to you. Send them an email, a text, a phone call. Just say, hey, I just want to get together. And plan to pay for their time, okay? If they charge for their time, pay for it, okay? It's about ridiculous that you want to just go get free info, because to me, it just shows a lack of respect for the advisor that you're working with. I don't care how much you're paying them, okay? You're asking for additional time, pay for it. Right? If you can't get their attention, they don't call you back, leave a message and say, hey, I want to spend more money with Jerry So will you, when you're talking to receptionists, literally, let Jerry know that I wanna pay him more money, so will he give me a call back? Because everybody else is putting out fires, a lot of the advisors. But anyways, get in front of them. Why are you sitting around waiting for them to call you? Why? Right? You got something on your arm. You don't tell your dermatologist, well, I decided to leave you because you didn't call me to see if there was anything on my arm. Right? You get on the horn, you make an appointment, you go in and you say, hey, what's on my arm? So getting busy, taking care of your cash flow, preserving it, cash flow, and 2021 cash flow. Taking a look at it. You'd just be surprised if you just picked up a bank statement and looked at it. Just look at it. I mean, how long does it take to look at a bank statement? A minute? 2 minutes? Right? We got a stack of messages to call people back and staff that needs you. Great. From 11:55 p.m. to midnight, in those 5 minutes, look at last month's bank statement. Open up an app and scroll through it while you're laying in bed. And just be looking at, what's coming in, what's going out. I mean, that's a crude way of looking at what's going on with your business. I don't think it's really the smartest way to do it, but at least you're aware of your numbers, because guess what? Your bank statement, inflow, outflow, right? I mean, you can just look at the top of it and it says total deposits, total debits, total money came in, total money went out, right? It says, here's the beginning balance, $5,000, okay? $10,000 came in, $10,000 went out, and at the end of the month, I had $5,000. Well, right there, you're like, well, I guess I'm bringing in about 10 grand a month, and I guess I'm spending about 10 grand a month. Well, on what? There's your next question. Now you're looking at a P&L, and your general ledger is the most important. It is the most important report to get and look at, because it gives you every single detail of what makes up your P&L. I mean, you can look at a P&L and, okay, wow. The financials come alive when I'm talking with clients, when I sit down and go through their general ledger, because, I mean, most business owners, like, what was I spending money on January? Why was the numbers up? Why did we collect a whole bunch? Now, when you're looking at a general ledger, you're looking at the detail like, oh, wow. So why? Cash flow. Right? Cash is king. So the reason I wanted to, share this with you all is that if this is what I'm talking with clients about, then this is probably maybe some of what you're thinking about. And I would just encourage you to start looking at it. Be aware of it. Okay, so you look at it and you're like, man, that's pretty bleak. Good. I mean, it's good to be aware of that. And you're going to start making different decisions. You're going to start making a little more hardcore decisions about what's going out. You're going to maybe make a little more of a push to get money in. So we've had a lot of relief, right? We've had a lot of hand up. The trifecta, somebody said. PPP, EIDL, and the EIDG. Is there going to be more? I don't know. I think you should plan on there not being any more. Definitely not going to be available in the same way, I'm sure of that. So the way that you get through the year, the way that you land into 2021, still with the business intact, is all about cash flow, right? I had a friend of mine that told me when I first started my practice, he said, every small business is 90 days away from bankruptcy. It's like, wow, kind of true. I mean, even the businesses that have been around for a while. Now, there's those lucky businesses, and they're amassing cash and it just, they have plenty of cash. But guess what? In COVID, right, you start to see how cash can start leaving as there's nothing coming in. Doesn't matter how much cash you have, that happens. So for most small businesses, how can you be bankrupt in 90 days? Well, there's money in the bank, and if your business shuts down, or if you're like me, right, if something happens to me, how's money coming in the door? How quick am I running out of money? Right? Money I got sitting in the bank. I got my accounts receivable. So money's going to come in on work that I had done. I got overhead and bills to pay. Right? Well, within 90 days, I'm probably out of money. In 90 days, where are you at? No money coming in. No money coming in. So most small businesses, in the first 30 days, it's like, well, I got work that I've done. I'm going to collect on it. So the first 30 days of business shutdown or someone's laid up might kind of work okay because there's still money coming in. Well, what's happened in the next 30 days? Well, probably whatever money came in and whatever money's sitting around, probably exhausted operating the next 30 days. So we're 60 days into this scenario. Then what happens in that, the 30 days after your initial 60 days, right? In that third month, now you're going to savings. Now you're extending credit further than you can pay back because you don't even have any money to cover regular bills. That's why you're borrowing on money. You're hitting savings, you're hitting retirement, unfortunately. And if you're not hitting retirement in the third month, you're probably hitting retirement in the fourth month. And all of a sudden, in 90 to 120 days, everything you've been working for is gone. Now, why would that happen? Well, you got to get with an advisor like I am with my clients to be talking about stuff. To be talking about, where's my cash position? Look in the bank for starters. Where's my cash flow? Look at a bank statement for starters. Where am I going to be in 2021? Well, technically, you could just look at the last 12 bank statements and find a lot of information out. You can say, wow, I didn't realize I'm paying $1,500 a month on whatever it is. And then use these next 6 months to think about 2021 cash flow. What's going to be different? I had a video talking about, think about how you're going to have to do business differently because you know you're going to have to do it differently. So how you go about that is different for, how you go about that is different with every company, kinda. You know, what's probably different from every company is maybe just more how you earn your money. But most small business owners, they're bankrupt in 90 days. So we're not alone. Most small business owners have payroll. Most small business owners have rent and insurance and utilities, right? Most small business owners have expenses. Most small business owners have to have money coming in to cover those expenses. And then we haven't even gotten to the personal. I haven't even talked about that. Money coming out to cover your personal expenses, your personal mortgage. So cash flow, that's the key here. That's how you get through all of this, and be aware of how ugly it is, because it's not going to be what you expected, most likely. It's going to be different than what you've dealt with. And if you're a business that's not affected, which is awesome, start thinking about, but what customers of yours may be affected? Okay, I mean, just take a dentist. I mean, most people don't have dental insurance. It's out of pocket. Well, people will go get Ambisol and put, $5, $6 worth of ointment on their teeth if they have to pay for other things. Right? So dentists could get even affected. Take other, medical professionals. I mean, they could get affected. People aren't going to come in for elective surgeries as they're looking or have less money. So it's not just the obvious ones. It's not just the restaurants that are getting, hammered and a left hook and a right hook over and over and over. Okay? What's going to happen to your customer base? What's going to happen to your expenses? What's going to happen to your available credit? Right? So you could be a great business and plenty of cash flow, but you might be at a bank that they took a hit after hit after hit. Their reserves went down. They don't have the same lending abilities. which means that they may not be able to extend you the same level of credit. That has nothing to do with you. I mean, think if you have customers and they own a lot of real estate. Well, what happens if that real estate's not doing well? Are they going to still be the same kind of customer to you? So, when they talk about, well, I'm in a business that everybody is still going to need. Well, we saw for a long period of time, with the shutdown, I don't know that any business was safe at all. And even the ones that are in the medical field and they were essential and still saw people, well, were people able to pay what they normally have? I mean, what's their accounts receivable right now? Right? And then think of the medical professionals that weren't able to possibly do what they normally do because they were worried about COVID, or the hospitals shut down, or the hospitals were overflowed. So someone that usually makes rounds or surgery at the hospital, now they can't, right? See how that's a doc that would be essential, right? I mean, attorneys, well, courthouses closed, so they can't do cases, which if they can't do cases, it's not just the attorney. Well, who are the people that are representing? What are their needs? Right? So we're all in this together. So part of looking at your cash position, part of looking at your cash flow, part of looking at your cash flow, cash position in 2021 is also being aware of what is that for those that you are doing business with. Okay? With is your customers and your vendors. What's going on in their world? Right? So being aware of that also helps you be more aware of your own cash flow, your own cash position, because it all comes down to one thing. Cash is king. All right. Hey, thanks for tuning in. If you made it till here, I love you. If you made it to here and you're not a subscriber, boom. Would love it if you would join the list. And I'll just tell you this. You're going to get through this. How do I know? Because you made it to here. Okay? You're going to be aware of your cash position somehow, some way. You're going to find a way. But then continue that process, not just this one time. Continue the process to looking at your numbers, because knowing your numbers allows you to know your business. All right, hey, thanks for tuning in. And then don't you ever forget, you've never met a CPA quite like me. All right, have a great one.